Philippines came up with this national strategy for financial inclusion in 2015, and it got refreshed again in January 2022. It defines a six-year window within which, through specific interventions, specific outcomes are to be aimed for. And indeed, during that time, I think it has also made it very clear their definition of financial inclusion. I think the BSP's definition of financial inclusion is a state in which everyone, and mostly the vulnerable sectors especially, they have access to effective financial services. Now, effective means not only are the financial services available, but they are also properly designed, of good quality, and fit for purpose, serving a variety of needs, starting from payments to savings to borrowing to probably insurance and investments. And since then, there has been indeed significant progress made in Philippines. If you look at Philippines now, compared to 2019, when less than 49% of the population had any form of financial account, today that figure stands at 65%. And this compares very favorably against the goal that the financial inclusion strategy document had set at 70% by 2025. And in fact, if you look at adoption of digital payments, the goal against a goal of 50% of all retail payments being digital, the country has already achieved the level of roughly 53%. And this was in its teens pre 2019. So there has been significant progress. And in the meantime, there has also been the digital banking license, which has been given in 2021. And if you look at the BSP statistics that was released recently, between March of 2023 and June of 2024, out of the 23 million accounts that got opened, savings accounts, almost 45% come from the digital banks. Challenges do still remain. I think first and foremost, the adoption of digital financial services relies a lot on good quality, consistent access to the internet, and that remains a challenge. It is patchy outside of the urban areas, especially as you go into rural areas. And you will appreciate that Philippines is a geographically dispersed country of 8,000 islands, and for the entire Filipino population to benefit from digital inclusion, it requires improvement in internet access in the rural areas, especially. I think the country's national ID system remains a work in progress initiative. As you know, digital inclusion relies a lot on a strong digital identity, and that still remains work in progress. And until there is a full-fledged digital identity system, effective and operational, there will still be some friction in providing access that providers of the services have to deal with. Uh, uh, Secondly, there is also this challenge of lack of data when it comes to lending. I think only about less than 15% of the population is covered by the current credit bureaus, which means lenders don't have enough information when it comes to lending. So these are the typical challenges. And the last but not the least, I think the MSME community still remains thoroughly underserved. I think even the consumer borrowing community is underserved, but the MSME community has a much wider gap. So if you look at the bank credit, only about 6% of the bank credit goes to MSMEs. So these are some of the challenges, but also some of the gains that have been made over the last 3 years. Yeah, so in the 3 years since the licenses were given, six digital banks have given a license. They have made a significant contribution. Like I highlighted earlier, almost 45% of the bank accounts opened in the last 12 plus months have come from digital banks. banks like Maya and indeed others have made the access to credit much more simpler. And in fact, they have also given an alternative to a large segment of population, as we would call it, the unhappily banked population, which has been banking with traditional banks, but is looking for uh, convenient, simple, and delightful experience. So digital banks will not only continue to expand access to banking services for the underserved, but also to the served. It provides a credible, more delightful alternative. In the meantime, if you look at Philippines as a market, I think post-pandemic, it has generated a lot of interest. And the reasons are not difficult to guess. It is the second largest country in terms of population in ASEAN. It has maintained a healthy economic growth between 5 to 6% GDP growth over the years. And indeed, recently the regulator announced that they have lifted the moratorium on new digital banks. So there will be 4 new digital banks coming up next year. That's an indication of the opportunity that exists given the vast gap between the demand and supply, as also a reflection of how attractive Philippines has got over the recent years, given the quality of players that want to participate in the market. Last but not the least, it has been a very supportive and progressive regulatory environment that facilitates the adoption of digital